Bonjour à tous et bienvenue. Now I want you to picture this. It's late 2025. Canada is just coming out of a pretty messy snap election. There's a new minority government in power, and their very first move, well, it isn't just a budget, it's a massive all-or-nothing bet on the entire future of the country.
Yeah, this was anything but business as usual. The document they put out wasn't just some financial update to tweak a few things here and there. No, this was an emergency response. It was a bold power play from a government that really desperately needed to prove it could steer the ship through some very, very stormy waters.
The plan itself was titled Canada Strong, and it was nothing less than a massive national industrial strategy. The goal here, to fundamentally re-engineer the Canadian economy, to go in and fix these deep-seated problems that have been piling up, not just for years, but for decades. And that's the alarm bell that was ringing in everyone's ears. This quote from the Bank of Canada's senior deputy governor, it just captures the sheer urgency of the moment. The feeling was that small, incremental changes, they just weren't going to cut it anymore. It was time to, break the glass. It was time for a radical intervention.
Okay, so let's dive into this a little deeper. What exactly was this big emergency? Well, the Canada Strong budget was designed to fight a war on two fronts. It was built to address two deep, structural crises that were genuinely threatening the country's prosperity.
So on the outside, you've got this global rupture. Basically, the stable, predictable world of international trade that Canada had relied on for decades, it's fracturing. And at the same time, on the inside, we're facing what's called a productivity paradox. This stubborn problem where, even though we're all working hard, our economy just isn't getting more efficient or more innovative.
And this slide, this really shows you our biggest vulnerability. That external rupture is so dangerous because a staggering 75% of our exports go to just one country, the United States, a partner that has become more and more protectionist. The budget itself calls this exactly what it is, a major structural weakness.
And that internal crisis, it's just as serious. Despite having a really skilled workforce, Canadian businesses have chronically underinvested in new technology and automation. The problem got so severe that the OECD actually forecasted that Canada could become the worst-performing advanced economy in the coming decades. Think about that. That's the paradox that just had to be broken.
So, moving on, how do you even begin to tackle a double crisis like that? Well, the government solution was, frankly, unprecedented. It introduced a completely new way of thinking about the national balance sheet.
The absolute core of this plan is something called the Capital Budgeting Framework. And what it is a fundamental change that splits all government spending into two separate buckets. It's a strategy that other G7 nations use, but it was brand new for Canada, at least on this kind of scale.
And here's the key difference. Think of it like this. Operational spending is about keeping the lights on. Paying government salaries, maintaining current services. Capital investment, on the other hand, is all about building the future. Things like new infrastructure, new technology, and big projects that are going to fuel long-term growth.
Now, this separation created two new fiscal anchors. First, a promise to balance the operational budget. That signals fiscal discipline. And second, a commitment to keep the total deficit from spiraling out of control. And this lets the government argue that spending billions on these big capital projects isn't actually inflationary because it's an investment in our future capacity, which helps control prices in the long run. Pretty clever, right?
Okay, so with this new framework in place, the government got ready to make an absolutely enormous bet. They were about to inject a historic amount of capital to try and reshape the entire economic landscape.
And that is the headline number. $783 billion in deficit-funded spending. The budget calls it a generational investment. And this isn't just stimulus money to tie things over. It's a very deliberate attempt to build a more resilient, domestic Canadian economy.
And this right here, this number illustrates the sheer scale of the ambition. The whole goal of that public spending is to act as a catalyst, to spark a grand total of $1 trillion in investment from all across society, both public and private, over the next 5 years.
So, where is all this money actually going? Well, this table breaks it down into four main pillars. First, $110 billion to tackle that productivity crisis, really pushing new tech into businesses. Second, $115 billion for infrastructure, specifically to build new trade corridors away from the US and towards Asia and Europe. Then, $25 billion for a whole new federal housing plan. And finally, $30 billion to build up our own domestic defense industry. So as you can see, each one of these pillars is a direct shot at one of those core problems we talked about.
Right, so the crucial point is what all this spending actually does on the ground.
This budget isn't just about writing checks. It's about systematically creating brand new markets and new opportunities for Canadian businesses.
The whole plan is engineered to generate economic activity in three really distinct ways. First, by transforming how the government itself operates. Second, by incentivizing all the existing businesses out there to upgrade their game. And third, by actively creating entirely new industries from scratch.
Let's start with the government itself. So to balance that operational budget, the plan calls for right-sizing the public service by about 40,000 positions. Now, the only way you can do that without crippling services is through the massive adoption of AI. And just like that, you've instantly created a huge, urgent market for Canadian AI companies, complete with a new fast-track procurement office and a clear mandate for Shared Services Canada to partner up with local tech firms.
Okay, next up. To fix the private sector's investment problem, the budget introduces its flagship tax policy, something called the Productivity Superdeduction. And this basically allows businesses to immediately write off 100% of the cost of any new technology investments.
And you can see how this just completely changes the math for a small business. Before, the really high upfront cost of new tech was a huge barrier. But now, the government is essentially subsidizing the upgrade. It totally alters the return on investment calculation, and it's designed to unleash a massive wave of tech adoption across the country.
And finally, the plan goes beyond just incentives. It actually aims to create whole new industries. And the prime example of this is housing. The goal here is to shift how we build homes, moving it from the traditional muddy construction site to the modern assembly line.
The new $25 billion Build Canada Homes Agency, well, it won't be a builder itself. Its mission is to be a catalyst, to create a new Canadian industry of housing manufacturers. So think factory-built, modular homes. This creates a brand new advanced manufacturing sector that's going to need sophisticated digital systems for supply chains, for logistics, for production, right from day one.
It is, without a doubt, one of the most ambitious national strategies in modern Canadian history. It's a bold diagnosis of the country's deepest economic problems, and it's an equally bold prescription for a cure. But, it all comes down to one massive question.
Can this massive injection of public capital truly spark the kind of private sector revolution that's needed to solve our productivity crisis? Can this trillion-dollar bet successfully pivot our entire economy from dependency to genuine domestic resilience? The future of Canada's strength may very well depend on the answer to that question.